Thank you, Dan, and welcome today to the Investing MarketFest. Thanks for joining us today. So, just to let me know the audience today, how many of you are day traders and trade intraday? Be it futures, stocks, what do you know? What do you guys trade? Or are you guys more option traders? Okay, flood of day traders. Okay, fantastic. Some option traders, okay. All right, well now think about this. And this is something that I wish I would have thought of the first time I started trading and when I got into trading. And the question is, what moves the intraday markets? Isn't that an obvious question? As a new trader, shouldn't you really look to know that question and know what the answer is? It's so obvious. I can't believe I didn't ask that when I first started trading. And you know, you listen to the people on CNBC and Fox Business News, and earnings drive things, and it's all about earnings, and it's all about valuation and all that kind of stuff. Well, turns out that none of that's true. You see, the market and the stock market, it's all perception. It has nothing to do with valuation. Who's to say that Goldman Sachs has the most accurate way of valuing a company versus Merrill Lynch? Who's to say they're right? It's all speculation, isn't it? I hear people talk on all these channels saying, oh, you know, buy Uber, the stock's going to be worth $50 a share, and they give me all these reasons and stuff. And you think about it, and okay, if Uber's so great, why is it down $50 today? Or actually, Uber's not publicly traded yet, is it? Priceline. If Priceline's so great and everyone's talking it up, why is it down $100 today? Why did it get slammed? Well, it has nothing to do with earnings. It's all speculation. So, and I know they want to buy and hold for the next 3 to 5 days, but oh, thank you. Appreciate that. I'm glad you enjoyed my book. It's a great book on Amazon. So if the market is all speculation and it's all perceived value, not real value, then we need to take another step back and say, what moves the market? Now, as a day trader, you should ask yourself, what moves the market up and down every day? What forces happen? And everyone has indicators, right? Tell me your favorite indicator, everyone. What is it? And I'm not going to knock any indicators. All indicators work some of the time, right? Sometimes they work in a blue moon on a Friday, right? Everyone's saying volume, volume, volume. No, it's not volume. It's not volume. Volume does not move the markets. Volume does not move the markets. What a crazy statement. How can you possibly say that? Volume does not move the market. That's not what moves the market. Boy, I got everyone curious now. Supply and demand. No, it's not supply and demand. Okay, so we got a lot of moving averages, a lot of MACDs. Yeah. Well, let's look at a chart. Buyers and sellers move the market. There yet. Emotions. No. I'm gonna tell you guys what it is. Just give me a second, though. Fear and greed, right? Yeah. Well, this is a question that I really asked myself. Here's a chart. Here's a chart of the S&P right now. You got to ask yourself this question: what moved the market from here down to here? This is on oil. This is oil. Why did oil go from 35.15 down to 34.30 today? Why? If you don't know that answer, stop trading. It's a fair question to ask, isn't it? It's a question you should know the answer to. News moved it. Nope. How many times have you had a trade go, or how many times has news been great and just phenomenal news, and they absolutely slammed the stock, they slammed you know, earnings came out, right? Great earnings, and they slammed it. And you're like, what in the world? I mean, why? It's a great question. Okay, well, let's get into this. Why did price go from 35.15 down to 34.30? It's something you've got to know and understand before you get into trading. Without it, you're just flying blind, in my opinion. So let's zoom in a little bit more and take a closer look at this. Okay, everyone knows what this is, right? This is a level 2 screen. Not everyone, okay. This is a level 2 screen. And the markets are an auction, right? It's a daily intraday auction of the markets. And people don't know yet. You're gonna have fun when you understand this. So the market's an auction. A lot of you guys know that. It's an auction. Now, let's say you're bidding on something. Let's say you're bidding on, let's make this a little simpler. You're at an auction, and here's the auctioneer speaking, and he's auctioning off this car, right? And it's a Tesla that's not on fire, and he's auctioning off this car. And the bid, let's just say, is $100,000. What makes price go up and down? Now, when the auctioneer starts the auction at $100,000, the bid's $100,000. Can price go down? Yeah. If there aren't any bidders, what happens? They bring price down. But let's say someone bids $100,000. What makes this go up in value? Well, to keep this very simple, it's someone else coming in saying, hey, you know what? I think it's worth $110,000. And you ask yourself, if I were to apply this to the markets, what is its equivalent? Well, what type of orders are out there? Well, you've got market orders and you've got limit orders. Now, do limit orders move the market? No, they don't. What moves the market is someone saying, hey, look, I'm willing to pay more than what this guy is, and it's a new price. It's a new level at this exact moment of where price was just recently. So let's look at the level 2. And the level 2 makes a little more sense out of everything for us. All right, so you know what I'll do? I think I'm gonna freeze this. I think it'll make it a little bit easier. And I will freeze it this way. No, that's not going to do it. Let's freeze it using this. Okay, here we go. Okay, so I just froze the market. Okay, I just took a snapshot of it. So what's going on? Well, let's look at the level 2. This is an auction. The level 2 is simply a representation of an auction. And let me explain the auction going on right now. Right now, you got someone over here at 34.25 bidding 10 contracts. Over here, and these are buyers. Over here, you've got someone at 34.26 bidding 27 contracts. These are the sellers. So what moves the market? What moves the market? The market is someone over here sitting on the fence coming in saying, hey, you know what? I think the market's going to go up. And I believe it so much that I'm willing to go across the aisle, come over here, and pay full price and buy at the market. because I'm so convinced it's going higher. You see, if you don't have someone going across the aisle saying, hey, I think it's going to go up or go down, the market's not going to move. You have to have someone willing to pay retail price at the current time to get in or get out of a trade. And that's what moves a market. Now, let's talk about who really moves the market. Now, if you and I come in with 5 or 10 contracts, do you think we'll take out all these orders there? No. We'll take out 10, which will leave us with 17. So you and I really don't move the markets. It's the institutions that move the market. Now think about this. If you could look at a chart and know, because they've left their clues, where sellers came in, maybe the sellers came in here, and where buyers came in, and where the institutions decided to move the market, that would be some really good information. Because you and I don't have enough power to move the markets. 10, 20, 100 contracts, no big deal. But if you can come in with size, and if you can come in with conviction and say, look, you know, I think price is going up. I'm going to take out all of these orders with market orders and move things higher. Wouldn't it be nice to know where they're doing it and how they're specifically doing it? The question you got to ask yourself is, if market orders move the market, where in abundance are they coming in, moving price, and in what direction? You waited 3 years to knowing that. Cool, you're on the right track. So what we want to do is uncover where they're doing this. Because here's what we found out. Okay, everyone saw that big move down right here, and everyone saw big volume come in. The question is, who's in control at all times, the buyers or the sellers? If the buyers are in control, we want to know, based upon the market orders they've placed, where they got in and where they're defending a position. So let's say you got some big firms coming in, some big hedge funds, and this is how it works, ladies and gentlemen. If you have a big hedge fund, do you buy 10 contracts of oil and hold it for a couple of weeks, or do you buy 20 contracts for a couple of weeks and hold it? No, you're not that nimble. If you're a hedge fund, you're coming in with 30,000 contracts, maybe 100,000 contracts, right? And are you getting in all at one day? No. You're getting in over a 1 or 2 day period, or you're getting in where you believe price is at its best. Now, the problem you run into if you're a hedge fund is if you just sit out here and keep either buying at the bid or buying at the ask, everyone's finding out what you're doing. It's no secret. But what if you could uncover where they're coming in and where they're doing business? Now you may have a method of trading. Now you may have a method of trading in a sane way. You also have a way of staying out of big trouble when the markets move. So what I like to do is I use a piece of software that's called Order Flow Analytics. And I will bring that up for you. Now it's a black chart. You're looking at this for the first time and you're going, what in the world am I looking at? This is absolutely insane. All I see is numbers and bars. How do you possibly trade off this? Well, Well, let me break it down for you a little bit. So what this software does for us is it breaks down where the big sellers and the big buyers are located. Now, let's go back to our original premise, is what moves the market? Market orders. Now, if we can track those market orders and know where the big institutions are coming in, that's some great information. So I'm going to zoom in a little bit. And let's zoom in right there. Hopefully you guys can see this. Now, let me try to increase the font on this for you guys. I'm having a hard time reading myself. Let's blow the font up a little bit and see if this helps. Okay, maybe a little bit better. All right, so let's look at what's going on and what this indicator tells us. So what this indicator does is it keeps track of what the market orders are. And over here, you've got the bid, and over here, you've got the ask. And what this is telling me is at this price, 170, at 37.18, 170 market orders went through. And what the software does for us is it will group together for us where the institutionals are buying, institutional traders. And the first thing you do not want to do is don't look to the left and compare the left to the right. That's the wrong way to look at this. Okay, you didn't have 170 orders and 160 sell orders. That's not the way you want to do it. So let me just take that off the table right now. What you're looking at is how this order here on the right compared itself to this one down here at 138. Just like you'd look at a level 2 screen. Okay, you see how they're diagonal? That's how you got to look at it. And that's the problem with the footprint chart. I had a couple of people say, you know, what about the footprint chart, all that kind of stuff. That's a problem with the footprint chart. That's why we don't look at it. That's why it's out of date. But if you got market orders firing off and you have 170 orders go off to buy and you have 130 to sell, who's going to win that bet every time? The buyers, right? Look at that. You got 194 compared to 160. You got 362 orders to 268. Who's winning that battle, ladies and gentlemen? The buyers are winning it every time. What happens with more market orders to buy versus less market orders to sell? The buyers win every time of the day. And some of you, it tells you how long you've been trading, really. But how many of you guys remember trading the old time and sales window? Remember time and sales? Here's time and sales for oil. Yep, it tells you your age. Back in the old days, all you'd have is time and sales. This is a long time ago. And these are all the orders that have gone by. Green buy, blue sell, all that. These are all the orders that are going by real time. So what if you could capture all this information and bring it down to a simplicity to where you've got the market orders and you've got the sell orders. And if you can find out where they're buying in areas where they're close to each other, you can uncover where they're buying and selling for the institutions. This is how institutions work. An institution, they want to buy 300,000 contracts. Well, here's a little trick that they like to do with you. On their order screen, it's a little different than ours. They have two little boxes. First one here says show, and over here, what's the name of this again? This is the total order, we'll call it. So what they'll do is they'll play a game with us, and they're gonna over here they might have 300. They want to buy and sell 300,000 contracts, but you know what? They're only going to show 10 on the level 2 screen. So this is my level 2 screen. They're going to only show that they're really trying to only sell about 10, and that's why you see these numbers so small. Now, if you were going to do 300,000 contracts, you'd probably want to do the same thing. Because if I knew that Goldman Sachs was going to buy 300,000 contracts, I'd get in ahead of them, and I'd be selling to them. And that's what it does, and that's what they do all the time. That's good, Jack. I like that. So what happens is they'll show 10, and when these 10 get filled, guess what? The amount of orders they have will be 299,990, and it will refresh and show 10 again until they're done. So that's what they're looking at doing. And it's a game they play, and they play it all the time, and it's really, really interesting to watch it because there are times where they play games with us, especially on the level 2, and they'll show themselves as, 150 contracts. Sometimes they're real, sometimes they're not. That's a whole other thing. So there's a lot of games being played out there. Now let's go back to our original part of our discussion today is what moves the market. It's buyers and sellers placing market orders. And what we want to uncover and what this software does for us and what the program that I have is I'm going to teach you how to use what's called clusters. And what this software does for us is it will cluster buy orders or sell orders. And we do it in clusters of 3, so at 3 prices here, do you see how there were more buy orders than there were sell orders? That moves the market up. You see over here, you see the 400 to sell over here. You see that? Well, if I have 400 orders to sell versus 300 orders to buy, who's going to win that battle every day of the week? The sellers, right? So here's an interesting thing that happens. When they come in with size right here, do you think they just have 10 orders to buy and that's it? Or maybe 100 orders to buy and that's it? No. They have 200,000 or 300,000 orders to buy right at this level. So guess what? When they try to get in here, they're basically defending a position. So if price comes down, we know where the market and where they're holding things. So that's how basically we use the software, is it tells us where the buyers are, where the sellers are. So let me hold off for any questions right now before I go further. Any questions? I'm going to grab a quick drink of water and I'll answer questions. Okay, just a couple questions here. Can swing traders use this information data? Now, tell me what time frame you're a swing trader. Are you a swing trader of the 2 or 3 days, intraday. Swing trading can be varied. You showed an example where the ask or higher and the number of countries bid buyers there, so there aren't reverse. No. But here's what we're seeing. Here's what we're doing. And I know this is kind of hard to see, but maybe I'll do this. So over here, we've got the bid. Over here, we have the ask. And this is keeping track of all the market orders for us. And we're reading it like this. Every time we read a trade, we're looking at it right here. Okay, that's how we're reading it. This software, when you get my program, is $500, and that's something you don't pay us. But the full price of the software is around $3,000 or $4,000. But we have a special deal worked out with them that will help us do this. Now, let me ask you guys a question before I answer get into more questions here. If you're in a trade, here's what you're basically doing. You're watching these people here with sell market orders, and you're watching these people here with buy orders or buy market orders. And you're watching this battle. You're watching this battle very closely. If you can see which one's gaining, which one's losing, you know who's going to win. Does looking at the dome help? I don't look at the dome. I never, ever, ever look at the dome. I personally don't like the dome. Here's why. Trading is just like driving a car. You got to keep your eyes on the road. And if I got a chart up, you see, when I trade, I want to keep my eyes right here. If I take my eyes off the chart, look at a dome, you're taking yourself out of the trade. Now, when you look at this chart, guess what? You're keeping your eyes on the market. So I don't like the dome. I don't recommend using the dome. I think it's a huge distraction. Okay, is this cluster, let's see, a lot of questions coming in. All right, I gotta freeze this. We got a lot of people here today. Is this cluster only calculated when you have 3 times in a row stronger buyers and sellers? Yes, that's exactly what happens. So here's what goes on. Is you see the green clusters here, and you see the red clusters. This is the highest concentration of market orders of buyers in this entire price bar. This is a key level. This is where they're holding price. So very important that you know that when you get into a trade. All right. How do you trade with this info? Good question. So here's basically what I do, and I get more in depth when in my order flow X-ray course. So when you look at a whole day, and I zoom out on it, and I put it in this mode, do you see how I just see green and red clusters throughout the day? See those clusters? Well, this is telling me where the institutions are trading. The institutions where they're hanging out. Now, you can use support and resistance. That's a great way to trade. But how would you like to do it with surgical precision? If I see a red cluster here, this is where they're defending an area. And I know that the next time up, that they need to take out all these orders for this to go higher. So the way I use this software is wherever there's red and green clusters, and I'm just doing this in a nutshell, I'm not getting into this huge detail like I do in the course, but this is telling me where the institutions are hanging out and where they're getting in, where they're getting out, which will help me with a lot of things. It helps me with entry. It helps me with stop orders. It helps me stay in a trade. and it tells me how strong the market is. You see these blue clusters? So these blue clusters, huge information there. Huge. Tells me where the market's neutral and who's buying it, who's in control, buyers or sellers. Now, does this work for stocks? I do not personally trade this with stocks. I personally trade this with, here's what I trade this with. I trade this with oil, the S&P 500, with bonds, which is the 30-year, the NQ, the YM, and what else? Gold. That's what that's my personal experience with it. I've not done stocks. I've not done forex. This is what I've personally used it with. There are so many products out there that to become good at all of them is virtually impossible. Focus on one or two and get really, really good at it. I love bonds, I love oil, and I love the S&P. Those are my top 3 favorites. It works phenomenal with them. Okay, more questions here. Can this be applied to intraday options, E-minis, and Nadex? Yes, absolutely. Absolutely can be applied to Nadex. If you're doing Nadex options, absolutely. Okay, so you trade 2 or 3 days. I don't know if this is going to help you as much with 2 or 3 day swings. If you're swing trading, I don't think it's going to be a big help to you. This is proprietary software. If you get our course, which I'll be giving you more information on in a little bit, it will. We have a phenomenal price on it, and it's an additional cost. It's $500, but I mean, to know where they're selling and buying is easy. Can you use this to predict price direction? If so, tell me where the market is going next in real time. Well, what this is telling me right now is that sellers are, let's see, buyers are in control, and buyers stepped in right here, and they're defending this area, is what I can tell you right now. Again, this is a 3 to 5 hour course, just getting into all the specifics. So I'm just giving you more of an overview right now. Let's see. So using a system like yours would protect us from getting sucked into traps, correct? Yes, it's a huge thing. It will tell you where the traps are, and it will tell you where they are ahead of time. And then more importantly is, a lot of you guys, because I've done this in the past, is they just use arbitrary stops. Well, I use an 8-tick stop. I use a 50-cent stop. Well, if you could uncover where they're strategically defending a position, that's a great way to trade it, right? So when it comes to stop selection, it's much more surgical than just saying, okay, well, here's my stop, and, you know, actually, here's a common stop. Common stop is, okay, well, I went long here, my stop is below the swing low, right? Very, very common. Well, I'm going to tell you right now, right below here is a better stop than just your swing low. So it will help you with your stop selection. Is the zero and unfilled order often found at the highs and lows? Actually, it is. Let me show you. And that's great information. Look at this. So look what happened here. Price went rocketing up, right? We had 310, 90 contracts went up. The buyers were done buying, and you had a zero right there. Guess what? Time to come down. tells that to you. Very good information. Good question, by the way. Okay, a couple more questions. Explain the different shading in the clusters. Oh, okay, good question. The shading is important. A darker green, that was the heaviest buying in that cluster. The lighter colors, lighter. So this is the heaviest concentration. The darker the color, the more selling, the more buying. All right, hold on. The time frame is anywhere from a 1 minute time frame up to a 30-minute time frame. Do you present this as a standalone methodology about anything else? What I will do is I will marry this with Confluence. And I love Confluence in my trades. I like to find other things that support. Does market volume profile give the same information? Volume profile is good. Market profile, not as much. But volume profile is another good Confluence. Volume profile is more of a longer term area, and it's something that you can also use to give your areas credence. So good question. Can this software help you with targets? Absolutely. See, if I'm looking at a chart such as this one, and let's say I zoom out, and I'll put it in this mode right now. This is more of a simplified version. But if I'm going long, see, if I'm going long right now, here's a problem right there. That's where sellers came in. Here's a problem. Here's a problem. Here's a problem. I know I got to get past these people for price to go up. Why? Because in the past, they said, hey, look, we're holding price here. Boy, a lot of good questions. TF, yes, you can use it with TF. And again, a lot of you don't have your names selected, so I can't tell what the difference of who's asking questions because your name isn't there. Okay. Could you use this on VX? You know what? I've never done this with VX. How is this different from Jigsaw? I have Jigsaw. I think it's a great product. I think it's more simplified and easier, and I think it's a better rendition of what's going on. That's my opinion. But again, I like Jigsaw. I think it's a good product, and you know, I'm gonna just tell you Jigsaw is good also. But this, I think this does a little bit better. Yeah, if you trade Nadex, Theo, you're into binary options and stuff. Huge, 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 huge. How do you know where market will close above or below a strike price? That's a whole nother. That gets into open interest on options. That's a whole nother discussion. So I can't really get into that. This is live CL. Yep, this is a live CL chart right now. And oil hit 11-year lows today. And I'm hearing $22 a barrel. What do you think of that, huh? Does this help us with high-frequency traders? Absolutely. Now, I've heard both sides of high-frequency traders. To me, they're in such a micro time frame that you have to really step back and take a larger time frame. So I'm not actually, what do they say? What's the percentage of liquidity of high-frequency traders? Is it 30% of the market? It's crazy. Nice job, Reg. I should Okay, I wish I could show your post to everybody how much you like my X-ray class. Okay, a couple more questions, and I'm going to continue on here. Let's see what platform. Okay. So the platform that this currently works with is NinjaTrader. They were going to get it for eSignal, but I don't know if they've accomplished that yet. Do you have a template for the software set up? We can have a Ninja. Yes. If you get the course, we will send you the template, so it's set up exactly the way I have mine set up. Does the software work with CQG data? Absolutely. It works with CQG, Rhythmic, and they work fantastic. Can you look at the S&P 500? We'll look at the S&P 500. Now I'm going to use a little bit different chart, but the S&P 500, it's going to take a little while to load up. A lot of data today. Okay, the question is, if your OFA clustering would be very precise to verify whether or not support resistance area is likely to hold or not, what are your thoughts on that? Well, if you've got support and resistance, what's the #1 game they play with support and resistance? It's getting whipped out, right? It's whipping you out. It's taking out the lows. So for me to take this trade, I've got to make sure all these buyers are gone or all these sellers are gone. And that's what I'm watching for. I'm watching for the buyers and the sellers to go away. That's a very vague and a very general statement. I get more into that a lot more in the course. But if they're not taken out, they're not going anywhere. You've got to get out. You've got to see where they're doing stuff. Okay, Kelso, I've not done this on currency. I've not looked at currency, so I can't tell you. So looking at the chart, would you say buyers and sellers? Let's see. Does it work with TradeStation? I don't think it. No, I don't think it does work with TradeStation. What's the small these rectangles? These are exhausted. These are exhaustions, is what they are. For you to trade, do you wait for price to come to your area? You will want to wait for price to come to your area. Absolutely. Okay, so I've just got about another 10 minutes. Time is getting quick here today. But basically, this is a separate thing that you'll get with our course, and it's $500. You get it directly from Order Flow Analytics. If you go to their website, they're going to charge you $3,000. Now, what we've done is this is very powerful software. Now, how many times have you looked at software and you don't even use 80, 90% of it? In fact, you may even use 5% of it, right? Okay, thank you, Dan. How many times do you use software and you're only using 5, 8% of it? So what we did is we went to Order Flow Analytics and said, look, you guys got great software. It's very powerful stuff. This is how we use it, and this is what we need it for. So what they basically did is they stripped it down to the nitty-gritty, and check out my courses, such as options trading in a nutshell. I like to get to the point and get to the and keep it simple. So what we did is we said, hey, look, we don't use this stuff. We don't use that. This is what we need. Can you just tell us what we need and forget about the other stuff? Now, the other stuff's great, but this is what we need. So they stripped out a lot of components of the software and just gave us what we needed, and then they ended up passing along a great price to our students for $500. And it's kind of nice because It's almost a la carte. That's the way I like to do things. All right, so let's keep moving on. So when we look at a chart, okay, so we're looking at a chart now, and you're always asking yourself the question, who's in control, the buyers or the sellers? Are there market orders? What's moving this market? And what we'll end up doing is we'll marrying this with what's going on. So looking at the chart, and let me give you one more example. Okay, here's a very strong setup. And this is going to answer your question is, how is this different than support resistance? Well, see this red cluster right here? This is where real resistance is. It's not up here. See that? This is, you see where this was the concentration of sellers that came into the market? This is where the real market is. Now, did you notice what happened? See how price came down and went back up? Where did it stop? Where did it stop? Right there. See that? Do you see how it's, you know where resistance is? It's not here. It's here. Is that good information? Absolutely. Because if you look at a price bar, let's say I have a price bar, and it looks like this, right? Here's your price bar. Did you know that resistance could actually be right here and not up here? See, that's the problem with support resistance is just because this was the high and where resistance was, that's not the true, that's not the real resistance. Where is resistance? Where the institutions are selling out 300,000-400,000 shares, right? Let me put it to you this way. So this will make sense to everybody. Okay. If this is my price bar, and I got people selling 10 contracts here and 100,000 right here, where's resistance? If price is down here, where's resistance? Is it here where there's 100,000 orders going short, or is it 10? See the difference? Ah, who just had an aha moment with me? Okay, if you had an aha moment, put awe on the screen. Oh, that's where resistance is. Okay, why did price come up and stop here and not go all the way up here? Because this is where true support and resistance was. Okay, good information to know. Now, how many volume profile traders? How many volume profile traders out here? Okay, volume profile. I love it. Now think about this. Is volume profile always right? Of course not. Is OFA, no, is this system, is OFA, the stuff I'm showing you, 100%? No, nothing's 100%. If there is something that's 100% out there, you're going to have all the money in the world in the next 2 or 3 months, and you'd have all the money, right? But if you could marry the volume profile levels, right, they look like this, with the right levels with this software, and I could show you how to do it, it would set up for a great way to get into trades. Because here's the problem is, if I got a price bar, looks like this, and I've got 100,000 orders to sell out here, how many times does price come up and never hit for your short and you get missed all the time? all the time. How many times does price just get a couple ticks away and miss you? Why? Because you're not playing where the real support and resistance are. You see, here's the funny thing is I can have a price bar that looks like, I can have bars that look like this, right? And the real resistance could be right here. This is where resistance is, not up here. So you could have your trade up here all day long, but if you don't know what the market's really showing you and this is where it is, you're missing the game. You're missing out on a lot of trades. So that's kind of the way, and so anyway, the whole objective today is just kind of open your eyes a little bit to the realm out there is how do I track and how do I see what the big institutions are doing? How do I trade with them versus against them? And how do I trade more surgical? Buck, I'm going to tell you that this is one of those things where it's nice to have screen time before you start trading live. Oh, good. And again, the software that this currently works with is NinjaTrader. They were programming for eSignal. I don't know what happened there. It doesn't work with TradeStation, but NinjaTrader is the premier software that they have it work for. So if you're trading without this information, I think you're at a big disadvantage. If you don't know where the institutions are playing, then I think your accuracy is way down. So anyway, if you want to get involved with this, now's the time to do it because we got a special thing going on. Because you've learned a lot about interaction between buyers and sellers and how you can use that information to make better market decisions. Unfortunately, there's not enough time for me to go into all detail on everything you need to know about order flow. The time I'm going to save you. Now, you could get this software, spend $3,000 for it because I'm the only place out there that I know of where you can get it for $500. And you could try to figure this out for the next 6-9 months, and you're going to find it a very, very valuable piece of software. But during a week of training seminar, I spent 3 hours going over a lot more detail. I break it down to its specific, and I get very, very specific. Step 1 here, step 2, this is what I look at. And like I said before, yeah, down the road, I would recommend getting the entire software. But right now, we've just stripped it down to what we need and what we're focused on. Which side of the candlestick represents buyers and sellers? Okay, yeah, real quick, guys. I'll answer questions in a little bit, okay? I got another flood of questions coming in. So during this trading, I'm going to teach you 2 specific trades that work very well using the insights you get from this order flow course. And I call it order flow x-ray. The reason why I named the course order flow x-ray is because it gives you a view of the markets you just don't get anywhere else. When you can track what the buyers and the sellers are doing with market orders, it gives you a strategic advantage to where they're getting in, where they're defending a position, and where you're going to be trading around and through. And here's what you're going to learn. You're going to learn how to read the order flow of the market and avoid playing the indicator game. And I mean, how many times do you get into a trade? And again, I'm not going to knock any specific indicator, but let's say you get into a stochastic indicator. It says buy, and it's at the lower 20%, and then automatically you get smacked. Well, it's because you don't know where the order flow. You don't know where the institutions have gotten in and where they're defending an area. What about Bookmap? Bookmap, I've seen it. I don't have really any time in on Bookmap, but it's just, Bookmap to me is not as clear and concise as order flow. I'm going to show you how to be on the right side of the trade. If you're getting into a trade, we'll give you an example real quick. Let's say for fun that you've got this red cluster here. You guys saw the clusters, right? The red and the green clusters. This is what I call stepping on in front of a Mack truck, or not looking both ways before you cross the street. If the market headed down, right, and it's coming back up, would I go long here when I got a red cluster? Absolutely not. What does this red cluster represent? These are sellers. These are sellers. These are institutional size trades. If you're going to go long right here, right on the red cluster, you're going to get smacked 9 times out of 10. But you may not know that. Okay? You know, if you got a, let's say the OFA looks like this, and you'd say you got a red cluster right here. Price comes down. Well, here's the high, right? If price comes back up and you're going long here, you're going to get smacked. Why do that? Well, you don't know that unless you're seeing and you're learning what I'm showing you. Okay? Now, I'm giving you some great insights, but I've not put everything together for you. That's why you need to take this course. I'm going to fill out the entire thing for you so you know how to trade it. So you got to know exactly where to place your stop orders to minimize losses. Guys, using stop orders of just a statistical, oh, I have an 8 tick or 8% stop, that's almost nonsense. Well, I should say it's complete nonsense. There is money management to it, which I got to tell you, but shouldn't you place your stop and have the institutions defend your positions for you? I think that's a great question to ask. Absolutely. So you're going to finally understand where the institutions are trading. You need to know where they're trading. If you're not trading with them, then you're trading against them. And I'm going to tell you over time, you're going to lose trading against the institutions, statistically. You learn how the market tries to fool you and avoid getting fooled. Now let me show you one really cool thing that this will tell you. You'll see me do this in my room. Now, let me see if I can get an example up here. Here's a great thing I love that this software does for you. Okay, here it is right there. It's actually happening right now. You see this 100 contracts right there? The 100 orders? Oh, they just went away. Do you ever look at your level 2? And you've got to have your level 2 up, ladies and gentlemen. You've got to have your level 2 up. But maybe the level 2 will show 300 orders out there, and you're wondering if it's real or if it's Memorex. That's an old commercial, isn't it? Well, guess what? If you see 300 orders there and you look at the OFA chart, guess what? It will tell you exactly how many got filled. And if only 10 got filled and these guys went away, what does that tell you? It's a spoof order. It's not real. It's a bunch of baloney. But what if you saw 300 down here and you looked at your OFA at that price and there were 500 orders, contracts filled at that price? What does that tell you? Oh my gosh, they're buying there. They're not moving. There's a huge order there. You're not going to go short. You definitely don't want to go short. So that's huge information. And that's why you want to get involved with this today, because if you don't know that information, you can get hurt. Or you can hope all day long that price will go down, but if they're buying there, you're just going to get hurt. And you don't want to be there at all. So I'm going to teach you how to read the charts, and the charts really read like a book. And once you learn how to read a book and learn the language, it makes it much, much easier. And you learn to use intelligent stops and just not arbitrary ones. And this is a huge thing. If you use this for stop methodology alone, huge, huge savings in your trading account. So it is a huge stop management help. And I got a lot of questions. I'll get to them in just a little bit. You're going to discover precision entries for instant gains, and understanding the order flow can help dramatically improve your winning percentage, anywhere from 10 to 25%. Now, here's one thing: and here's the question: how accurate is this system? That is a very subjective question. I wish I could tell you it is, 98.2% accurate. What I'm going to tell you is you've got better information to make a trading decision. And it does take a few weeks from watching the chart, from watching the screen, to learn it. I'm going to make it real simple for you with the course, though, to show you what to focus on. But if you can make better informed decisions because you're watching where the buyers and sellers are done, it'll make a huge difference. And yes, you can backtest with this. You can use market replay. Great, great way to learn. That's the way I would learn. So the thing is, you can flip a coin, and every flip of a coin is a 50-50 coin toss. But if you could turn your winning ratio into 60-40, even up to 75-25, and increase that win rate, that makes a huge difference in your P&L at the end of the year. And that 70-30 system into a winning ratio of 80-20, even up to a 95-5. So the course, it's currently available on our website for $597. If you sign up today, you get full access to the Order Flow X-Ray course. It's just, we're going to give it to you today for $297. Go to investosuccess.com/X-Ray, and you can take advantage of that today. And I'm going to show you two specific trade setups, and it does not include the software. Just want to make sure you understand that it does not include the software. But the OFA indicator is normally about a $2,500 to $3,000, and we've negotiated a special discount for the X-Ray students for just $500. If you email support@investosuccess.com after you register, we will send you a link so you can go ahead and get the software at the discounted price. Just one or two extra winning trades will easily pay for the course and the indicator. And here's a special fast action bonus. For the first 22 people who sign up today, I'll throw in 3 weeks of my live trading room. So in my live trading room, I use OFA, Order Flow X-Ray, and I use what it's telling me, and you can watch me trade that live. And this way, you don't need to get the OFA indicator right away. I'll show it to you on my screen in the trading room so you can see it for yourself and how to improve it. But I'll just tell you, most people buy the software right away because it's very, very powerful, and it's information you really need in your trading. Again, it's just $297. If you go to investosuccess.com/X-Ray, it's a two-trade setup, and again, it does not include the indicator. So I don't make this no-brainer. Make sure that you don't have any risk. This is my 30-day money-back guarantee. Sign up today. Check out the entire course for yourself. Join me in the trading room at least 2 days a week so you can see my OFA indicator on the screen. Take just 3 trades per week over the next 30 days using the trades you've learned, starting with $2,500 in real or simulated trading account. And after 30 days, if you have not generated at least a $500 in real or simulated profits, show me you took proof, you took action, and we'll give you a 100% refund. So you've got nothing to lose. And if you go to investosuccess.com/X-Ray, get started today. So I got a few minutes left. I'm gonna answer some questions. What size chart do you use for ZB? I will use a 12.3 on that. Does not work on TradeStation. Does not work on TradeStation. Okay. Okay. All right. Do the institutions trade CL being it moves so dramatically? Yeah, absolutely. When you see 3,000, 4,000 contracts go through on oil, you know that's institutional trading. I mean, that's millions of dollars worth of trades. So, which NinjaTrader data feed is required for the software? I'm using FXCM NT demo account. What I can tell you what I use. I use Rhythmic or I use CQG. Both work great, and those are the two that I personally use, and could attest to. They do have other data feeds, but again, I've only worked with those two, so that's all I can tell you. Have I back tested the system? Actually, I've traded the system live for well over 2 years. So I've got 2 years of trading with this system. What's the difference between OFA and yours, what you've added? Don't know how to answer that, James. If you look at the OFA courses that they have from OFA, Mark Stone has a great course. I know Mark, he's a great guy. I am probably more simplified in the way I trade, and I just kind of get to the nitty-gritty as far as what I do. And I'm a shorter time frame trader than most people. Yes, I do. I trade 20, 50 lots all the time. Thinkorswim, no, it does not work with Thinkorswim. The only thing I would use Thinkorswim with is for trading options. If you're an options trader, Thinkorswim is the best way to go. But the software has not been designed to use Thinkorswim. I don't remember. I can't see anyone's names today. It was just frustrating. Would you feel comfortable to trade 100 lots a contract? Well, that's a really loaded question. With the right confluence and the right trades, yeah, 100 contracts, I would trade it. More on the S&P though. S&P can handle 100 contracts a lot easier. You can back test this with NinjaTrader, absolutely. What's your hit rate? What I'm going to tell you more is, let's say your current winning rate is 50-50. It's one of those things where it has a very, very high probability of raising your win rate. So if you're a 50-50 trader right now, probably in the next couple of weeks you're going to go to 60-40, 70-30. Okay, but you got to understand what it's doing. I don't know what kind of code it is. I am not a programmer. I couldn't tell you that. I am not a programmer. Good. Everyone likes the value of it. I do not answer questions about my own personal account. Yeah, people have tried to imitate OFA with other indicators, and I've not found anything close. So I want you to look at this as it's a way of improving your current trading methodology. Now, I'm going to teach you what I do. Here's the problem is here's the problem in trading, because I've had this one student where I told him exactly what buttons to push, what to do, and he still screwed it up. And that's something that's out of my control, because your interpretation of what I say and your exact doing it is another. So for me to say, you're going to go up this percent and this is going to be improved is hard, because I don't know your level of competency. I don't know how good a trader you are. And but what we found is it will improve your trading, and it will make a 50-50 trader, a 65 or 60-40, 70-30 trader. It has what we found is there's a high propensity for your trading to increase. So that's kind of what we found. Okay, I am done for the day. I'm going to give the room back to Dan. Thanks for joining me today. And go ahead and check us out, investinsuccess.com/X-ray, and learn what's really going on behind the level 2s with the market orders, and it's going to really make a big difference in your trading. So with that, this is John with Invest in Success Investing. I will catch you next time. Dan, I'm going to give the room back to you. And make sure you check out the Order Flow X-Ray course.